How will MSTR's stock price perform in a Bitcoin bear market? I think this is a question a lot of us have. I'm going to take a look at some historical data of the bear market that Strategy has been through since adopting Bitcoin and how some things might be different this time. And again, this is assuming that we do have a traditional bear market cycle, the 3 up years, 1 down year. We're going to run through some scenarios. We're going to look at some historical data, and we're going to see how likely it is that Strategy overperforms or underperforms Bitcoin's price. My name is Forrest Hodel. I'm a Bitcoin educator, and if you want to book me for a one-on-one consult and coaching session, you can do so in the description, and we can go over Bitcoin basics, best practices for security, and any other questions you might have about Bitcoin or Bitcoin treasury companies. So I think the first thing we should look at here is comparing Bitcoin to Strategy in the last bear market. So we're taking a price from the high, and you can actually see MSTR hit a high on the first all-time high peak of Bitcoin's price action in 2020. And so we're taking it all the way from there, all the way down to the bottom of the bear market in 2023. And we have 89% drawdown for Strategy. If we compare that with Bitcoin, we have to actually see that Bitcoin hit an all-time high again on this second peak in 2021. And so the drawdown all the way down from there was 77%. So 89% down on MSTR and 77% down on Bitcoin. So MSTR underperformed in the last bear market. And even if we took the percentage instead from this peak, the same peak of that Bitcoin hit, we are still down 85% compared to 77%. So even within the same time frame, not necessarily the highs to lows, we are still down more so on MSTR. And this makes a big difference, right? That's, that's 8% different, but that ends up being quite a lot. 85% down compared to 77% down is pretty significant. So one thing I wanted to do here is go 85% down from the current high. If we do that, we go down here to $66 per share of MSTR if we had the same downturn in percentage wise from today's price of MSTR, which is crazy. But again, if you zoom out here, you can actually see where is the previous peak. I mean, MSTR's share price has gone up so much since that drawdown. And this is that drawdown here that we were measuring before, right here. And it looks like nothing. It almost looks like absolutely nothing when looking at MSTR's share price right now. So you can see that MSTR has performed really, really well since then. So here, let's take a look at what MSTR had going on for it back then. It had a secured note that was backed by the Bitcoin on their balance sheet, and they were paying a 6.125% per year fixed interest rate on that. And this was due in 2028. And that's a lot of interest, and it's only 500 million, so half a bill, and they bought Bitcoin with that, and they issued it in 2021, and they actually redeemed it in 2024 in September, and they redeemed it by issuing convertible bonds instead and using the convertible bonds to pay off the senior secured notes and have a way less amount of interest payment and basically a much preferred type of debt instrument. It looks like they also had in 2022, they also secured a term loan for $205 million with a floating interest rate, which was SOFR plus 3.7. And they collateralized this with some of their Bitcoin holdings and a cash reserve. And they paid about $7.7 million of interest on that. They also had a couple different convertible note tranches maturing in 2025 and 2027. And if we actually look at their updated convertible bond debt that they have, these have all been redeemed. So they've reissued new convertible debt with further away from expiry or maturity date, I should say. So I did run a poll here on Twitter, and I asked, do you think MSTR will under or overperform in a bear market, and why? So a lot of people thought it would underperform Bitcoin. So here we go from Panic 22 here. From the 21 peak to the 22 trough, MSTR underperformed Bitcoin by 71% for a year. Granted, the conditions were different and MSTR have new tools at their disposal now. Still, MNAV will compress to around 1 or even slightly below, as well as follow Bitcoin's direction. It is, however, a good opportunity for them to deleverage and raise capital to stack more aggressively in the coming expansion as Bitcoin rises and will spring off from an even more advantageous position as MNAV expands again. So that doesn't really make sense that they're going to raise capital and deleverage. They have to add leverage to they're going to have to add debt probably at these lower prices of Bitcoin if this happens, and then be able to aggressively stack Bitcoin. So their MNAV in the previous cycle did go below 1. So that is why Panic here is talking about that. And we'll get into that a little bit more, but we'll just see what other people said here on this. Kevin here says, not only do I think they will underperform in a major bear, 70% down, I think that the treasuries that begin to explode will happily sell to MSTR, basically getting a stop loss on their treasuries and keeping the market from puking more. The idea here that Kevin has is that all of these other treasury companies are in a worse off position in a bear market than Strategy. They have secured debt like Strategy used to have in the last bear market. Maybe they don't have as much conviction. Maybe they want to change up their strategy. And I don't think all of the Bitcoin treasury companies are going to be in a dire situation. I think some of them will be prepared for this and have preferreds or operating income to be able to buy more Bitcoin at the distressed prices that Bitcoin could get to in a bear market. But the ones that do want to move on from this strategy, move away from the strategy, MSTR could buy directly from them, therefore not allowing that Bitcoin to go onto the market, and they could pay market prices for it, but that would allow Bitcoin to not continue to go down in a bear market situation. So Panic here said that the conditions were different and MSTR has new tools. So let's take a look at these new tools that MSTR has. And their tools are Stride, Strike, Stretch, and Strife. And these are preferred instruments. So that means that they pay a dividend or a annual percentage. STRC pays it monthly and the other ones pay it quarterly. And they all target a different set of investors looking for income in the preferred market. So as MSTR's share price goes down in a bear market and Bitcoin's price goes down as well, Strategy, as long as there's liquidity and demand for their other preferred instruments, can issue them and buy more Bitcoin. So they can stack additional sats because Bitcoin is on sale to them, and there's no reason for them to actually sell any of their Bitcoin into a bear market or even sell their share price or their shares, ATM, the common stock, into a bear market as well, as becomes less and less advantageous if MNAV does compress. They can issue these preferred instruments, which are a form of debt, but a debt that doesn't come due, a debt that doesn't add a maturity date liability. And they already have these maturity date liabilities with their convertibles, but they don't start until 2028, and then they're all paced a year apart. You can combine these two into just a $2.8 billion amount, but each one of these basically comes due every single year starting after 2028. So if we have a bear market in 2026, there's no risk of needing to convert or needing to pay back the initial debt here until 2028. That's when that starts to happen. So there's no risk of anything coming due during a bear market, essentially. So when they issue a Stride share for $86, they have to pay the effective yield or the 10% dividend on the liquidation preference. And this $86 never comes due. So they just pay that dividend over time. We all know fiat is going down in price or in value, and Bitcoin over time is going up and to the right and has to outperform this 10%, which of course it's going to do. Strike has an 8% dividend at liquidation preference, and the effective yield is 7.4. So if they issue at this price, they're actually only paying 7.4 per year, 9.2 for STRC. And STRC is incredibly interesting because you have to think about what is happening in the broader market if there's a downturn in Bitcoin. Is Bitcoin correlated to the other aspects of the market? So if interest rates go down. So let's take a look at the US 2-year. We could look at the 10-year. They're very similar in sort of the range that they're at in the time frame. So you can see here, this is when they basically lowered interest rates incredibly rapidly to compensate for everybody being locked at home. And then they kept those rates low through 2020 and 2021 and started raising them in 2022. And as the interest rates started to go up, that's the same time that Bitcoin's price began to fall. So there was a combination of a few different things. There was over leverage within the system. There was sort of a peak euphoria here. There was a few different exchanges and platforms that started to blow up, and there was some paper Bitcoin, and interest rates going up meant a less liquidity within the market and a tightening cycle. And so all of this started to puke out, and the price began to fall. However, these interest rates are still pretty low. So in 2022, right, this is 22, 23, right, all the way up until 23, basically. So all the way into 2022, which was a lot of the bear market was in 2022, right? It actually started to recover. Bitcoin's price started to recover in 2023 when interest rates began to sort of have their peak. So all this time, interest rates for the 2-year are basically 3% and lower. So with the lower amount of interest rates, all of these preferred instruments that pay effective yields that are way higher become more and more attractive to investors that are looking for yield. So if there's investors looking for yield, they're going to park their money in STRC so that they can have basically a low volatility instrument that pays higher than other instruments out there. And when they park that money in STRC, that capital is available for MSTR, the company, and then they can buy Bitcoin at these distressed prices in a Bitcoin bear market. So they can actively acquire more Bitcoin because the broader market sees these instruments as more attractive, likely as interest rates get lowered to compensate for a downturn in the economy, and that downturn in the economy is reflected in the stock market. So you kind of have to think of the knock-on effects of all these things, right? And because the interest rate is so tied to the potential Bitcoin bear market, then all of these instruments become more attractive. And because they're more attractive, MSTR can effectively use them better to buy more Bitcoin. And as they buy more Bitcoin, the market can reflect and see that they're able to buy a lot of Bitcoin. They're able to increase their NAV, right? Their holdings, their Bitcoin NAV will go up, not in dollar terms, but in Bitcoin terms. And therefore in relation dollar terms, but it's compensating for the downturn of Bitcoin's price. It depends on Bitcoin's price at the time as well, but their Bitcoin holdings can increase relative, and therefore they demand a premium on their NAV because they're increasing their Bitcoin holdings over time rapidly in a downturn market. So this is the idea of protecting the NAV. And what can actually happen is if they go to 1 MNAV or below, they could issue all of these debt instruments as there's more demand for them, likely because interest rates will have to be lowered in a downturn in the economy, and they can actually buy the common stock back, and that becomes more accretive than actually buying Bitcoin because their NAV is a negative or under 1 MNAV. So it becomes more accretive to buy back their stock price. And when they do that, they're not providing cover for shorts. They're pushing up their MNAV, and they are doing it with debt that becomes cheaper and cheaper as the effective yield will go down based on increased interest in these instruments, which push the price of them up. I mean, STRC already has a floating rate, essentially, compared to the SOFR, which will go down as well in a broader downturn market, potentially. Again, we have to make assumptions here that interest rates would go down in to compensate for an economy that's in trouble, and that economy in trouble is correlated to Bitcoin's bear market. So right now we can actually see that interest rates are pretty high. Interest rates are 3.7, so there's a lot of ability for them to go down, which would help bolster up an economy that's in trouble. Typically the Fed is late, so if they've dropped rates, it's because the economy is already struggling. They retroactively work on data, or you can actually pretty safely assume that they want to create these boom bust cycles and that there's a lot of people that benefit from them. But essentially my theory is that MSTR has positioned themselves really well with STRC and STRD and STRK and STRF. To a lesser extent, I think STRD and STRC become very attractive in a bear market of Bitcoin and a bear market of MSTR's share price. And therefore, it's going to help protect that NAV from going below 1. And it's going to actually allow MSTR to buy an outsized amount of Bitcoin and therefore be even stronger when Bitcoin inevitably recovers from a bear market. I also don't suspect that that Bitcoin will have a 70+% drop in price again. It's possible that it drops somewhat in a bear market, right? There's a lot of correlation. There's a lot of people that use this as a very liquid asset and hold value in there and are able to sell. There's a lot of leverage within the system. There's potential for paper Bitcoin. All of these things can unravel and can lead to price rapidly going down. But I think that there's the market is a lot more robust and there's a lot more incentive to keep it from dropping too much. And there's a lot of institutional buying that will come in and kick up the price after it drops so much. And we've seen that. We've seen Bitcoin's price sort of doing this stair stepping up instead of this parabolic rise in previous cycles that we've seen. And that stair stepping is partially because as the price wants to dip down, there's buyers that step in and they buy it. So there's a lack of volatility to the downside. And I think that will continue even if we have sort of a larger cycle kind of thing play out and we see a downturn or a bear market. I think it'll be muted. I think if we have a bear market, it's going to be muted. And we also need to see a euphoric rise before the bear market comes in. And those two things are going to balance themselves out to some degree. So if we go up to 250, we might go down back to 100,000. And that's a huge, massive drop, but it's still very close to where we are today. So that whole time, MSTR's preferred instruments become more and more attractive as the returns in Bitcoin are deemed questionable in the bear market. And these are guaranteed returns, and these are from investors that are seeking yield while other yield products potentially take a hit as interest rates have to capitulate to prop up the broader economy, as that's what the government and Fed do, is they facilitate money printing when they deem necessary and to manipulate what we deem as the free market. So let me know if you think I'm wrong that MSTR has the potential to outperform Bitcoin. I think it will actually do better than Bitcoin in a bear market. I know that sounds absolutely crazy because of the leverage they have. And I think that leverage they have will be overcompensated with their ability to issue more leverage into a downturn and buy Bitcoin. That's the thesis I have here. I don't think it'll play out the same as it did last time where they underperformed Bitcoin. I think that they will actually overperform because they will look more attractive and they will be able to bolster up their balance sheet as the price of Bitcoin goes down, which will allow them to overperform Bitcoin in a bear market. I know that sounds crazy, and it makes you probably think, what is the point of owning Bitcoin if in a bear market MSTR will outperform? But the idea here is that Bitcoin is the innovation, and Bitcoin is what they buy. And you don't own Bitcoin by owning MSTR. You're exposed potentially to the price of it in a leveraged security instrument, and it's a different asset altogether. Bitcoin is a bearer instrument where if you hold the keys, you hold the ability to own it and the ability to move it. And with MSTR, you're always, degrees away from that Bitcoin through a security, through a brokerage, through all of that. So Bitcoin itself should be owned even if you think it will underperform MSTR in the future. Bitcoin itself is the innovation. It is the asset that you should own, in my opinion. And that's how I feel, right? So I own Bitcoin, I own MSTR. I'm very bullish on MSTR, but Bitcoin is what you really want to own. So if you want to check out how to buy some Bitcoin, you can do so on Bitcoin Well. There's a link in the description, and it's you actually get some free Bitcoin for signing up using my link. There's links to the Jade hardware wallet, which is a great beginner intermediate wallet. There's the Stampseed kit, get 15% off of that. It's a great way to preserve your seed phrase for future generations. There's 5% off of the Start9 nodes if you want to run your own Bitcoin node. And there's a link for Sats Arcade, which is a play to earn gaming platform that I built out, and you can earn sats for playing retro style arcade games. Thanks everyone for watching, and we'll see you on the next episode of Bitcoin, Not Crypto.